Do you ever feel like tackling student loan debt can seem like such an overwhelming burden to shoulder? Something that has no end in sight, and you may as well spend the rest of your life paying it back, right? Well, it really doesn't have to be that way. Today we're going to talk through a few ways that you can get a handle on your student loans and hop on the path to being debt-free. And when taking control of your student loans, it's important to understand the type of loan that you have, as they each have slightly different characteristics. I'm Tony from Wealthfront, and today we're going to talk about student loans. I spent 10 years of my life paying it off. In my 20s, I felt like I couldn't do anything but pay off student loans. It was always in the back of my mind. I want to share some of the things that I learned about student loans the hard way. So when it comes to student loans, there are basically two main types of student loans. There's the federal student loans, and then there's the private student loans. So first off, federal student loans are the main type of student loan that most of you have, right? They can sometimes carry higher interest rates than a private student loan, but they also offer unique benefits. For those loans, if you're still in school, you don't have to worry about making payments, as the interest typically doesn't really accrue until you actually graduate. Also, if you lose your job, you might be able to apply for payment deferrals. So while you're still searching for your job, you don't have to worry about that. And these allow you to pause your payments. Federal loans allow you to pay income-based repayment schedules, meaning your monthly payment depends on your income. This might allow you to start saving after college without throwing everything you have at that student loan right away, because your payment really depends on, well, your income, like we discussed. Now, private student loans take a more holistic approach to determine your interest rate, so they can also offer their own benefits, like customizable payment plans, for example. While federal loans don't allow this type of customization, a private student loan usually gives more types of payment options and isn't just limited to the income-based plan. Just as the name implies, a private student loan is made by a lender such as a bank, a credit union, state agency, or a school. Basically anything but the federal government. Now, for most people, you take out a federal student loan to pay for college and grad school, and then you might look into refinancing after college with a private student lender. This is because the private student lender takes that holistic approach and will factor in your recent income when it comes to your loan terms. And speaking of refinancing, if you have a relatively high interest rate on your student loans, you might want to look into refinancing to not only save you money monthly, but over the long run as well. It can really add up. Among all existing borrowers right now, about 5.8% is the average student loan interest rate. Current refinancing rates from private lenders, they range from 2.25% all the way to 12%. But be aware though, if you're refinancing a federal student loan, turning it into a private student loan, you'll lose the federal flexibility and benefits we mentioned above. This doesn't necessarily mean you shouldn't do it. It just means that you'll need to be prepared and have a plan for any financial setbacks like losing your job. The private student loans don't always offer these types of forgiveness or deferrals when you lose that job that the federal student loans do. Besides the type of student loans you might have, you might also consider, while you're at it, your emergency fund. I know, here we go again, the emergency fund talk, but you gotta bring it up in this situation because it does matter. This is an essential piece to your financial health, and you don't overlook it when you're taking into account student loans. You should have enough cash in your emergency fund to have at least 3 to 6 months worth of living expenses set aside in cash before deciding whether to pay more of your student loans now or actually save. Next, let's consider your interest rates. If the interest rate on your student loan is above what you'd expect in investing in a broadly diversified portfolio of ETFs, you might be better off paying down your student loan with any extra cash. We typically say this is anywhere around 5 to 7% annual return, but let's just keep it at 5 to be conservative. So think about it this way. Paying off debt is a guaranteed return, and we cannot say the same thing about investing. However, if your expected returns are assumed to be higher than the student loan rate, it could be to your benefit to start growing that bit of extra money through investing instead of putting extra cash towards the student loan. Now, with that said, everything I just said makes rational sense, but if you just can't handle the burden of student loans anymore, consider setting a goal just to get rid of it as fast as you can. Pay it down. Don't feel obligated to save too much now if you feel like you just can't get out of debt. I felt that way. I had student loan debt for at least 10 years. Every big financial decision was held back by the fact that I still had a bunch of money to pay the federal government. Consider this: if the emotional burden is holding you back from making your financial goals, just focus on paying off that debt and then focus on everything after that. If you're still in school but already bringing in income, consider putting any extra cash towards your loans now. It might feel like a drop in the bucket, but extra payments can actually add up and save you a significant amount in the long run. Some private student loan companies even offer you the ability to pay interest while you're still in school, so it's not accruing while you're still working on that degree. We know that's not possible for everyone, so just keep it in mind, but don't feel bad if you can't take that on yet. If you've got what feels like a mountain of student loan debt, don't stress. Just do your homework on the current loans, decide if you can refinance to a lower rate or not, and then just work on paying those off. This is Tony from Wealthfront. We'll see you next time.